Hello, Maverick Traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and here we are at another weekend. And this is the last week of April. And you know what? We are very happy to close the books on it because we had a great first 3.5 months of this year. The market was great. The last 2 weeks, the market has been crap. And sadly, I'm not here today to tell you that the market's going to be fantastic this week. I'm actually here to tell you, don't expect great trading this week as well. Let's cover what happened last week. We had equities that were basically flat. We had about 5 days of trading, and outside of Thursday, the market closed up or down like 0.1% every single day. So we're just hanging out in equities. Equities aren't going anywhere. The dollar's not going anywhere. Bond yields are starting to rise a little bit. We did see the cryptos got hit. Once the risk on sentiment came out of the market a little bit, the cryptos got hit. And we're going to take a look at the charts here to see where they're going. If we take a look at the economic news, early last week, we got Empire State Manufacturing Index much better than expected. And people said, oh, good, the economy's holding in. And then on Thursday, we actually got the Philly Fed. It's not listed on here, but I'll throw up a news article about it. You can see that the Philly Fed says, no, we are still in some trouble. So the U.S. economy is still in that slightly weakening phase. We got Canadian CPI that was lighter than expected. We were hoping the CAD would break out this week, and it did not. The CAD did not break out, and it failed miserably. It's back in its range. We got higher than expected CPI in the UK at 10.1, but lower than expected CPI in New Zealand. So the pound actually went up a little bit this week, and the Kiwi we thought was going to be weak. It was weak this week. And then European PMIs, they came in fairly mixed. Not that big of a deal. Overall, and you're going to see this in the performance and in the charts, it just was kind of a dud for the week outside of cryptos. And we talked about how cryptos were really the only thing that were moving, and that's what we saw. S&P was down 0.2%, the world index down 0.2%, cryptos down 10%. At one point in the start of the week, they were up, turned around. Gold gave up some, oil gave up some. So this was a little bit of a risk-off move, and that's what we were calling for as we were hitting up against resistance levels. So here is the S&P, and you can see that we hit up against that resistance level. We said, do not expect us to break out here. Expect us to hit that and possibly come back. That's what we got. So we got our pullback, exactly what we expected. Here's the problem. It's not done yet. We do not have a reversal candle and a confirmation candle. We still have prices that are moving lower. So we are going to be starting the week off with a slightly bearish lean in risk assets and equities. That's just where we are. Look, we are still above moving averages. Everything's looking more bullish and bearish, but in the very short term, we expect this pullback to go a little deeper, and then we'll see what happens on a bounce. There should be a bounce. The charting says there should be a bounce to some higher levels, but I think we're going to be under this resistance for quite a while. It would not surprise me at all if we based here for a month before breaking out to the upside. Let's take a look at the individual numbers here. In the world of Forex, last week we said we liked the Kiwi short and we liked the yen short. As you can see, the Kiwi did go down, but the weakest currency for the week was the CAD. We thought the CAD was going to possibly break out. It failed miserably back down into its range. We liked the European currencies the best on the long side, with the pound being our favorite, and you can see the pound actually was the best performer this week, up 0.7%. I've been talking about this for the last week or two, that typically in a good week, you have several currencies that have moved up and down more than 1%. That's a very volatile week in currencies. A great week is where things are moving 2 to 3% in a week. As you can see here, look at these numbers. We have compressed volatility. Things aren't moving as much as normal. In those kind of environments, we want to trade less. It means that everything has less opportunity. Everything has more chop. And it's definitely a much harder trading environment than when things are really trending hard. Flipping over here to cryptos, we already talked about how they had a bad week, and they had a bad week across the board. Pretty much all of them went down between 7 to 10%. So let's take a look at some actual charts here. We already took a look at the S&P. We're in a pullback. Let's take a look at the world index. We're seeing the exact same thing. It's in a pullback. We do not have a confirmation candle yet. However, we do have a rising 20-period moving average. Everything is more bullish than bearish, so we do expect there to be some sort of bounce somewhere that takes us back up to this level. My outlook is that we do not break above this level for a while. I think we are going to be high basing here before moving higher. Let's take a look at cryptos, because this has been where the market volatility has been. And it's been a very good trade on both sides. But you can see we have now failed to hold this breakout. We had a very clear breakout, and we ran it. And we rode it, and it was great. You can see we failed up here, and here we are. We're back down into these levels. Now, I'm not ready to say that it's totally failed until we actually have some closes below this breakout point. Look at these long lower shadows. We do have some buyers that are coming in here a little bit, but if we don't get a good fat green candle on Sunday, Monday, then all of a sudden we're back in the range. And if we're back in the range, we're not interested in really trading this outside of range-bound trading. So cryptos, if they don't bounce Monday, I'm putting them back on the shelf and say, I'll come back and trade you when you're ready. So that doesn't lead of us a lot of things to trade. We're seeing lower volatility in Forex. We've seen the breakout in cryptos fail. We're just back into a sideways range here. Not great trading activity. Let's see if there's something on the schedule that could help. But understand that we are in the last week of the month. There's generally less news out there in this week. Next week, we have all the news. It's the first week of the month, so we're going to have a much better week next week. I'm looking at this saying, okay, we do have the Bank of Japan on Thursday evening. We've got some CPI numbers out of Australia on Tuesday. And we do have the core PCE price index in the US on Friday. Those are going to be the three big reports. So if you do want to make trades this week, I highly recommend you trade around these moments. Outside of that, this is a week where you should trade less, not more. You really should be looking to trade less. We're getting compressed volatility. And just think about this, everyone. If I asked you at the first of the year, January 1st, if I said, hey, do you think every single week is going to be a great trading week? You would have said, of course not, Rob. Some are good weeks, some are bad weeks. Okay, here we are. We've had a bunch of great weeks. January, February, March were fantastic. Can you just admit that we might not be in a good market situation here? And remember, the saying we have at Maverick is trade the market in front of you. Not the one you want it to be, not the one you think it should be, but the one that's in front of you. The one that is in front of you right now isn't great. So we highly recommend you trade less this week. So we're going to go through currencies here, but I want you to be thinking of finding reasons to not trade, not finding reasons to trade. You can always find a reason to trade. You can always find a reason to click a button. Things are always moving, charts are always doing this, but be very, very cautious this week because most moves are not going to last long. They're going to fizzle out. You really want to be very selective, and we talked about trading around some of those news events to get a little bit of volatility in there. Here's Bitcoin. We went from a +2 to a 0 on the trend score. We went from a +3 on velocity to a -3. So right now, cryptos are pulling back. You can't touch them. You absolutely cannot touch them on the long side here. And frankly, you can't touch them on the short side either. So Bitcoin is just a no trade. Bitcoin Cash never broke out. So there was nothing to get excited about over Bitcoin Cash. And you can see it's simply just in its range. I mean, there is nothing exciting about this whatsoever. Ethereum was the best performer. And you can see it is still looking decent on the chart. We are above the long-term resistance here that we broke out of. Held it nicely here, broke out of the high base. Everything's looking good on Ethereum. So if cryptos turn, I am heading to Ethereum first. But take a look. Right now, everything is saying lower. Everything is saying down. So we are not turning yet. I'm not going to be the first one in line when these things turn. I'm definitely going to be looking to trade less, not more this week. Litecoin, it failed to break out, so we're not even interested in it. Ethereum is by far the best performer, but is by no means a good buy here at this point. So, Anka, what's your overall call on the cryptos here?
I'm on the same boat as you. Crypto had a big move and a very deep pullback. And I think this is where the percentage reversal that we've seen, it's not a healthy pullback. What we want to see in a healthy pullback is where the pullback is much smaller than the rally that we've seen. The fact that we have reversed those gains in such an aggressive way, it definitely kind of put me on out of this movement now, because it seems like the big move is already done. It got pumped to the upside, and then there was a lot of profit taking take place. So the question is that, okay, how much buying needs to come in to really lift these crypto markets back up again? So I think this is where we might be going in this little sideways range for a bit in the crypto markets, because we are now back in the previous range. So whenever we break out and reverse very quickly, now that's not a good sign. So I'm a lot more cautious on the cryptocurrencies. I think it had a great month so far this month. So I don't expect that to kind of continue on, especially as we have a lot more data to focus on, and the Fed is going to be coming up in the month of May. So I think until then, we'll probably see less inflows into the crypto world.
Yeah, Anka, that is an absolutely great call on that. Let's jump into Forex. We had been neutral on the dollar, and surprisingly, we are still neutral on the dollar. We said the dollar's a tough trade here, and I'm going to reiterate it. The dollar's a tough trade. I don't think you want anything to do with dollar. Just erase it out of your mind. We'll come back later to it. The yen. Now look, the yen has been a decent trade on both sides. And I think that this week, the yen could be a possible trade in Forex. And I think you can do it on either side. As you can see here, we are just at the bottom of this range. So in range-bound trading, you simply want to be more bullish than bearish at the bottoms of the range and more bearish than bullish at the tops of the range. And you can see we came down and had a turn. Now this is going to work much better if we get a deeper pullback in risk assets next week. So next week, if we get a further fall in equities, I actually like yen to the upside. Anka, what do you think about yen?
I think I'm really, where we are right now in the yen, I'm very neutral going to next week. I know we have the Bank of Japan, meeting next week. And again, most of the times we haven't really seen any change come out of it. So the only time we're going to have a big move out of those is when they come in and sort of make a change to the policy. But again, we have seen or heard the comments over and over again that they're not looking to make any change. So going to next week, I think what we need to do is we just need to take a look at this support area and then say, well, this is the last time we bounced off of this level, and we are now bouncing back again. So I don't like a short unless we break below that. But at the same time, I don't really love coming in to buy it right away either. I would rather be on the sideline on this yen till the meeting. And I think after the meeting, we probably have a bigger move one way or the other. But again, my expectation is very low on this one. And reward to risk ratio, it doesn't really give you a good odds at either way. I think this is a coin flip at this point. So let's talk about things that are actually moving. And Swiss franc, again, one of the best G7 currency, and again, still running, and we are not seeing any sort of sign of slowdown. So this is where I will get a lot of comments from traders and say, why Swiss franc is so strong? Isn't Swiss franc a safe haven currency? I think what we have seen in the markets in the past few months is really concentrated positions in these currencies, and we're just seeing a one-way trades. We saw a similar thing last year when we saw dollar just continue to catch that strength, and the yen was continuing to be on the weaker side. I think right now we just have to kind of pay attention to the money flows, and money flows are going into the European currencies. So Swiss franc comes in the top there, and again, we have the velocity and score is on the upside. So which means that anytime I see these kind of scores, these are one-way trades, which means that you only want to play it on the upside, and there's not a whole lot of opportunities to be had in sort of short-term trading here. So I think right now, continue to be on the upside. after this little run here, I would like to see this base a little bit. But for now, it seems like it's extended. But again, I would like to see some base patterns going to next week. Now let's talk about euro, and there is quite a we talk about correlation between euro and Swiss franc. Sometimes they deviate. Right now, they're kind of going in the same direction. We do have Swiss franc as a better strong trend score, where euro has one below, but then again, they're moving in the same direction. So we had a nice little base on the euro currency basket. You can see it's moving not in that aggressive way that we have seen with the Swiss franc, but the overall direction is to the upside. Velocity score is good. So this is a good currency to also pay attention to buy on the upside. So any sort of bases or any pullbacks seems like a good opportunity to buy into. And lastly, the British pound. And again, these are the currencies I want to highlight that, remember, euro and pound last year, this time, they were not that good. The Aussie was holding much better than the European currency. So what we are seeing is an opposite right now. And here we are, British pound, also doing the same thing, above the 20 moving average, above the 50 moving average. They're not extremely bullish. They're not running in a very fast pace, but overall they're slowly creeping higher, which again is telling me that it's just a one-way trade here, which is to the upside. So if you see a pullback, seems like those pullbacks are a good buying opportunity. But that's pretty much it. We didn't really need to pay attention to the acceleration here. Just like Swiss franc has a much better acceleration, but euro and Swiss franc in a slower in acceleration, which means that you need to be a lot more patient with that. And when you see it move, I think that's a point to jump back in. But these are only one-way currency trades, not really seeing a whole lot of volatility. And we can see that in ATR across the board. We have a fall in ATR, and so far not really seeing the kind of volatility that you want to see for those intraday opportunities.
And Ankit, you hit it exactly right with the European currencies. That's been the trade for the last 3 weeks. And look, we all know that trends will end sometime, but we also know that trends typically last longer than you think they should. That's the trade. And I love the way you're saying it. It's a one-way trade. Long euro currencies and short something else. And last week we thought the CAD may break out, and it didn't. And this is the real thing that makes this failure such a failure, is that we were seeing positive correlation between dollar and CAD, meaning the dollar would go down, the CAD would go down, the dollar would go up, CAD would go up. This week, the dollar went up. CAD completely disconnected from dollar and did its own thing, and the own thing was to crap the bed. So there's no way this thing is going to be breaking at any time in the near term. It is in a sideways trend at best. If you want to trade sideways, and you get more bearish at the top of the ranges and more bullish at the bottom of the ranges. But for me, I'm just going to forget CAD even exists for a little bit more. Bringing us to the things that are moving lower. Aussie and Kiwi. And it seems like 1 week the Aussie takes the lead as the weakest one, and the next week the Kiwi takes the lead. And this last week, the Aussie decided to put in a little bit of a run. As you can see, we've run off the bottom for 2 weeks. I love this setup. I absolutely love it. We ran right back into this area and we hit it hard. I don't see any reason why this doesn't come down. So I think this week, Aussie Kiwi could potentially flip-flop. And last week we had the Kiwi that really fell apart the last 2 days. I could see the Kiwi actually flattening out or maybe having a little bounce here while the Aussie got weak. What do you think about that call, Ankit, where they flip-flop?
No, I agree. I think they're sort of taking turns. We saw a very similar thing with the Kiwi as well, where we got that rally into that resistance area and then it just fallen back right below. So I think this is where it's very important to take a look at the relative strength and weakness and then sort of behavior of the currencies. So, when we do the reading of these price action, I mean, we have seen very strong 2 back-to-back weeks in the Aussie Kiwi, and we can see that in the Aussie Kiwi currency pair. So we could see a bit of a relief, sort of a taking back that bullishness into the Aussie, and then we can see the same thing kind of happen into the vice versa. We see the more selling coming in off this little rally in the Aussie here. But I think it's pretty clear that you want to be short the Aussie and Kiwi. And as far as the timing goes, they will just go back and forth. And this is where I love to diversify risk, where I can take a half a position in the Aussie and half a position in the Kiwi and just see which one moves. Otherwise, sometimes timing these currencies or these movements can be a little bit tricky here. And what do you want to be pairing with? I mean, if you look at this week, I know a lot of traders were just focusing on the dollar, but really the big movements were Euro Aussie, Pound Aussie, Euro Kiwi, and Pound Kiwi. And same thing with Swiss franc as well. These are the currencies where the movements are taking place. So I'm paying less attention to the yen, less attention to the dollar. I think the more attention is in this currency pairing that's actually moving.
So, Wonky, you said the perfect thing here is timing. So this trend score is a longer term view. This is kind of where we think things are going to be going over the next couple weeks, next couple months. This really doesn't help you with the timing. That's why we use our velocity score. Velocity score helps with the timing. This is what's happening on a shorter term basis. And right now, the Swiss franc is the strongest. It is extended a little bit. I really like this euro. If you remember, this euro was just coming out of a high base. So this is my number one currency for the week, the euro. And I told you, I think we're going to see the same thing. The Kiwi is extended to the downside, just like the Swiss franc is extended to the upside. I'm going to go after this Aussie. So for me, Euro Aussie is going to be the trade I look at, and let's take a look at it right now. I think this is the best one of the week, especially the first part of the week. So here we have the Euro Aussie, and you can see it's been a pretty stable uptrend. Run up, pull back, run up, base, breakout, pull back. Everything is looking really good here. Look, if you say I want to wait for this resistance to break out to the upside, okay. I got no problem whatsoever with that. This is a daily chart, so we could actually be in this base for the foreseeable future. The breakout of the upside is somewhere around 164.50. But I always love to get in. I love to get in like the bottom of the bases. Now look, we can't get into the bottom of the base. That was already on Thursday. But as we approach this, this is where I like to take third of a positions, fourth of a positions. I did this on Ethereum just about a month ago, where the charts were showing that it could potentially break out, but we had a lot of breakouts and then fallback downs. So if you don't know exactly when you're going to get the breakout, but the chart pattern looks really good for it, I really like taking just smaller positions. Take a fourth of a position here. If we break out, take another fourth of a position. If we fall back in, then you can be patient because your stop can be very wide. You've got lots of time to wait on this. So Euro Aussie to me, I have no idea if it's going to break out. I have no idea when it's going to break out, but the charts are telling me that is the next potential major move to the upside. It's just a matter of timing. And I don't think timing is going to be super clear. It could be a little messy. This is why I really like taking a fourth of a position early, taking another fourth when it breaks out, keeping a very, very liberal stop because you only have a half or fourth of a position, letting this trade develop. So maybe on Wednesday, Thursday, it breaks out instead of you thinking it's going to break out on Monday. It's a much better way to trade, especially in these lower volatility environments, to where you can sit through a lot of the chop, a lot of the BS, and then when it finally does run, you're at least in it for some, and then you can add in a layer up on it. So this is my number one trade, Euro Aussie. What do you want to take a look at?
Rob, my currency pick would be, again, Pound Aussie. I just wanted to highlight some of the pound movements that we have seen. Even just a day like today, we are seeing pound definitely picking up a lot more here. So I like the little basing pattern here in the pound as well. We don't have a whole lot of data next week for pound, which again makes it easier for us to trade it. And it's clear that we have been chopping around for a while, but then again, we are just breaking out above. So this is again a first signal that the price action is likely to move. And we can kind of go for the previous resistance level, which is about 186, I think 187. So there's again a decent risk to reward ratio on that one. But again, our goal is to really jump on these before they go for a big run. if you take a look at, all the currency baskets or the pound currency basket, we'll notice that it's actually just beginning to run and breaking out. So whenever we don't have a whole lot of overhead resistance, I think that's where things kind of run up a lot more longer. And I think those are the trades that we need to be, paying a close eye on. So same thing goes. Right now, I think the big question next week is, should we go with the Aussie and Kiwi? I think we like Aussie better than Kiwi, but let's take a look at Aussie-Kiwi pairing. And right now, again, there's no sign whatsoever that the Kiwi is going to be outperforming the Aussie. So as long as we have this in an uptrend, we want to be continue shorting the Kiwi here. Once we start to see this go down, we'll start to break some levels. Then we need to make that shift and go for some of those other crosses. And Rob, if you want to pull up Euro Kiwi, just to kind of compare that, this is the exact setup that we're looking in pound, the Euro Aussie. The only difference is that this has now made that run. But you can see how orderly the price movement has been. We broke out, test the previous resistance, which became the new support, and it just continued to run. And this kind of price action is very much one way, barcoding higher, not a whole lot of volatility. So again, these are the movements that, it's all about where you get in, but you want to be trading this on a higher time frame so you can be in this position much longer and kind of ride that trend. So I expect a similar thing with the Euro Aussie as we've seen with the Euro Kiwi, especially if we see the Aussie Kiwi make a change here. And I think we have a very good catalyst, Rob. Like next week, if you look at this week, the big movement in Kiwi came right after the Kiwi CPI miss. Next week, we have Aussie CPI. I think that would be a good catalyst to pair that up. And right now, all the inflation numbers have been coming out weak, except the UK, which is still printing higher inflation. Everywhere else, I think the inflation number is coming down weak. So I think this is, again, that would be a good catalyst to use that on the uptrend. So that will be my first trade that I'll be paying attention next week. But I'll be paying more attention to trading around the news events, because that's where we are going to get a little bit more volatility, and those are providing good energy in the markets. But outside of that, there's very low energy. So you really need to adjust the way you trade, or adjust your expectation, because these are not the quick markets where you can get in and get out. So higher time frame is definitely the better time frame to use in these conditions.
I think that's great advice. And this week, I've been saying trade less, not more. We've got some decent trends here. I think this is the week where you focus on one currency pair and you decide, I'm going to scale in. I'm going to scale in this week. I'm going to break my trade up into 4 different pieces, and you scale in and you basically say, hey, this is the one trade for the week I'm going to make. I'm not going to be looking to be in and out of a couple of different things. This is the one I'm going to do, and I'm going to do it a very slow trade to where you're legging into it. That's a great way to, quote unquote, be active, but not have a lot of capital and not have a lot of trading churn. Trade less, not more. That kind of wraps up for us, everyone. Thank you so much for being here, and have a great weekend. Goodbye.